order to understand the future, as you guys know, it's important to understand the past. Welcome aboard to a new session of charting across the board, where today we are going to navigate the patterns, the macro patterns on the S&P 500, as well as Bitcoin as quickly as we can, just in the event of another technical issues. Welcome aboard, everyone. This is Marbob6, your host, your harmonic pattern trader, presenting over the past few years unbiased approach in order to try to understand the nature of the market, in order to capitalize on this move. However, you guys know that none of these represent any financial advice. Please consult or conduct your finances with a professional financial advisor. As we are going to present the current readings in the price action for the S&P, let's start with the S&P 500. You guys know that we clearly are within an uptrending market. Obviously, we have been since the major cycle market bottom, okay, in 2022. Since then, major upward traction. You guys know this is an old pattern that we went over and over. However, the context is very important here to pay attention to, okay? As we mentioned before, in order to understand the future, it's important to understand the past. Looking left, market leave clues. Where we are today wouldn't happen if we wouldn't have this major reading. You guys know this is an ABCD reciprocal that was a technical proposition back then, October, December of 2022, from the lows of 3,800, projecting an upward traction towards the 61 and 6,300. That level, or those levels, were reached in December of 2022. Okay, we're bringing context here within the technical proposition that we're going to navigate today. New information, what's there now. Okay. After an upward move of nearly 76% from those lows, October market bottom, the peak of December 2024 created a downward pressure, a violent downward pressure of nearly 22%, bouncing back, reclaiming the previous high of 2024, where we are now having, okay, another pattern within this formation, a channel, basically. However, there is also another ascending broadening formation also navigated last year in August. Okay, this is new information that we are observing now on the macro, as these are based on the weekly structure that takes between 8 to 20 weeks to complete. Okay, therefore, the first technical proposition after achieving the previous high on October 2024, we have the major decline, the upward traction, and since then we were navigating cautiously, presenting trading opportunities along the wave. Okay. Now, the current information that we have on the S&P 500, remember this chart, okay? This one, technical proposition, these are extremely important contexts or variables within the current information. Pending ABCD, projecting an upward traction, pretty much at the market bottom, achieve those levels, decline, recapture, new levels, new data sets. In October of last year, 2025, we presented another argument on Bitcoin and the S&P 500 potentially for a cycle top in October. What occurred in October, okay, going back now into the weekly time frame. I really hope my stream doesn't break. But as long as we can, let me navigate this chart with you guys. In October, we presented arguments within our room for an evening star, a Japanese candlestick pattern that present cautionary levels right here, pretty much at the October 27 top. There was certainly, since October last year, that's been almost 3 months or 4 now, okay, new information presented then or since. There was a major decline, 6% turbulences. Okay, this is indeed a nice decline, but we're now slightly higher. However, if we bring the Wyckoff schematic into our technical proposition, you guys know that trading ranges that form after an uptrending market oftentimes leads to distribution phases. Distribution is normally occurred or accompanied with a decline or lack of volume. Okay, we bring the volume here on the, let's go into the weekly chart. You guys can observe that since October, basically, prices have been slightly moving upwards, but the volume has been declining. Classical distribution phase based on Wyckoff distribution, as well as Jesse Livermore. The two of them are proponents that if there is lack of volume without prices, or a company with the same upward traction of the prices higher, then this oftentimes signifies or implies that there is a distribution occurring behind the scene. Now, in order to zoom in now into a daily time frame, since we're charting the weekly, let's zoom in here within this range. What is occurring at those levels now, currently? Since then, we presented in our room a technical proposition, basically since December of last year, that what may be occurring within that range could be indeed a Wyckoff distribution. Okay? We presented our arguments back then, since we were trying to capture all of those major declines, which we did. We first captured the first short on October from this range. Along this range, we executed many positions. A short from the preliminary supply, then the buying climax at 7,000 region. The first test on the March contract was already at 7,000. Those who are tracking the cash market, we are still not there. But on the current contract, on the futures contract, we already reached those levels. We were aware about the 7K in the S&P 500 futures in our room since October and December, okay? Since then, clearly a trading range since then. Most recently, in another short execution at the upthrust within this gap, where I was previously in a short position after this major decline and told the members that I will exit the position if price will recapture 69.64, okay, which occurred. Therefore, I managed to capture some points in order to remain with some profit within that short. However, the technical proposition remains. This can still be within the context of a Wyckoff distribution, which, if that's the case, then we do have another harmonic structure. Also, all of this is presented within our room. Unfortunately, we do not do many streams as we can on the YouTube stream, but within our room, present all of these readings constantly. So therefore, if we are indeed within the last leg of the move of this trading range, okay, we can go much higher. We presented those levels, which I'm going to present how much higher can we go if this upthrust after distribution is indeed developing, okay? We are an hour or now 40 minutes away from the FOMC meeting, okay? We'll see what the patterns will bring and act accordingly. As you guys know, we're not pretending to know every single move. We rather follow the research from the legends of the past, 1930s and so on. So therefore, if the technical arguments are indeed within a Wyckoff distribution, which to me has been the case previously, you guys know what happened to Bitcoin when we have many other participants claiming for 200,000, 150, and so on. We rather drop into the 80,000, which I'm going to touch those levels in a few minutes, okay? Let's first finalize the technical proposition, the thought process on the S&P 500. Since we are testing this upward traction or the upper boundary for this trading range, we're still within the range of 70,070. Therefore, no major changes in my particular opinion, unless, of course, new information presents itself. As of now, what I see continues to be within this trading range. Now, we presented 2 weeks ago in our room that there might be an argument as long as these levels are recaptured. And let me bring this technical proposition as to why and how high we may go if that were to be the case on the S&P 500. So therefore, jumping back into the current information, you guys know context is extremely important. Here, as you guys can observe from the previous peak, this one is the ESH contract, the S&P for the March contract. If you guys can observe here, the levels, the 7,000 region was already achieved in October. this was a futures contract, a price or a contract that was trading in the future. Now we switch from December to the current contract that are trading within this current range, okay? So therefore, giving the benefit of the doubt for or to the bulls, we mentioned in our room, we share that if the 0.886, okay, the harmonic ratio from these highs to the lows were to be recaptured, okay, the 0.886, if these levels is indeed recaptured, mainly breaking higher with conviction, then there might be an argument for another pending W formation, in this case known as a deep crab pattern, given the B point of the reading. We presented this in our room. Therefore, there might be an argument towards the 1.61A, the golden mean, the golden ratio, 7281, or the 1.90, 7400. No major changes, in my opinion, okay, at least so far, until new information presents itself. Now, if we look into the macro reading, this is where it gets interesting. Keep this chart in mind. The ascending Browning wedge, also known as the Livermore pattern that we're seeing now across the board. Everybody is talking about Livermore pattern. Do they know who Livermore was? Escaping the farm from his pattern to run into the stock market to become, or into the floor to become a stock trader. I believe none of them know the story. This is, of course, pointless, but very interesting technical proposition presented then by the bucket guy, Jesse Livermore, who capitalized on a major short in the 1907, later on 1929. None of these are implying that we're going to have a similar reaction from those from that time, okay? What I'm trying to convey here is only the technical proposition. The ascending pattern, also known from Richard Schumacher as the ascending Browning wedge, and also within, of course, Elliotticians or the Elliott wave theory, this is known as an expanding diagonal, also navigated in October of last year. We're going to repeat what those levels may be, assuming that there might be higher levels only if we breach the 1.13, okay, on the current contract. Please pay attention to where you're trading, the cash market or the futures contract. There might be 40, 50 points difference. As I'm trading on the futures contract, I'm paying attention to the March contract, the current contract that we printed a high at 7,043 this morning, okay? Within the same range, clearly resistance since then. The highest point that we have here is a 1.13 for the fail wave, fake out, or the upthrust after distribution, as a technical proposition presented then, okay? That can be the case. This, keep in mind, is based on the cash market. So therefore, there are a few 40, 50 points difference between the cash market and the S&P 500. Going back into the S&P 500, the current information, plotting the same upward trend line on the weekly time frame, we can observe that prices are indeed still within the expanding diagonal or the major Browning wedge, okay, connecting the major touching points in the upward channel. I believe I have these previously on the cash market that present a better reading, but let's do this here anyways, okay? Therefore, connecting the major touching points, we have the wave 1, 2, 3, and 5. However, we mentioned in October how high or how long will the fifth wave may last. So therefore, we presented those arguments then, anchoring this corrective wave or this better symmetry for a wave from the lows to the highs as wave 1, 2, 3, 4. And now, are we now within the final wave 5? Can that be the case? We also presented how high can the fifth wave go. If we anchor, once again, the trend-based sweep extension, we mentioned that based on the theory for this particular pattern, Elliotticians have a range from the wave 2, the wave 3, to the wave 4. By the way, I am not a wave trader, only presenting the arguments based on the legends of the past, as, of course, Nelson, Ralph Nelson Elliott was also back then. Okay, almost get confused with the name here. The main levels for Elliotticians on the fifth wave can range to the 100% that we have been indeed. We tested in October. Therefore, the argument then was, all right, there might be an argument for higher conviction potentially for the fifth wave. However, fifth wave can range all the way to the 1.618, as well as the 2.618 in some cases. Very huge gap. How do you trade this, my friend? Analysis between execution to completely disciplines. Okay? So therefore, what we can observe here, based on a conventional pattern regarding or disregarding the or how high can the fifth wave go, we can observe that there might be indeed an argument for another test into the 7400. It could be, we do not know. But if there is indeed a case, we presented an argument I presented a few days ago in the chart after exiting the short position. Apologies. I presented on the 4 hour that there was an ascending or descending burning wedge here on the S&P 500, potentially implying continuation. So therefore, if we're indeed going to go to those levels, to 7,400, only if there is no upthrust here, okay? The way to trade, in my opinion, will be to wait for confirmation. A drawdown, another retest, and then we have the confirmation low as another lower high, okay? However, if there's more upward momentum, a retest into the previous resistance, in this case, based on the 4 hour, that will be around 6,900. That was indeed the range that was formed after our short execution recently that we presented as 64, 60, 69, 64, I believe. Another upward move, slightly higher. They were trying to kick us out of this move. However, I sustained my position and exited recently with a minor profit. Why? Because I noticed this pattern here on the 4 hour. Therefore, I need new information. Where can I execute? The readings here are telling me that now the gap, the breakaway gap, needs to be filled in order to recapture a support. Therefore, this argument may strengthen for the pending daily time frame, okay? I hope this is not too confusing. If it is, please rewind and watch all of these data points levels by levels, okay? So this is how high can the S&P 500 go. Okay, in my opinion, I mentioned before that to me, after reaching the major projection, I haven't really paid much attention to how much higher can the S&P 500 goes. 500 points, 800 points above my previous projection from 2022, okay, doesn't really give me enough argument to change my bias. What I see, it is still the same. With a new reading of this ascending running formation also presented in August of last year. Okay, I believe there is a stream I share with the members who requested a pattern, a micro pattern. I believe he mentioned that there are some reputable technicians flip-flopping, changing their bias. To me, there hasn't been any major reading to flip-flop. Unless you're executing, of course, on the minor time frames, the hourly and the 4 hour. On the macro, the same structural formation remains here. So 7,400, I wouldn't be surprised, 7,100. What occurs then will likely change my tune, okay? So therefore, if this is indeed another interpretation based on Jesse Livermore, we then have the supply zone as well as the demand zone within the lower trend line. So therefore, I'm not discounting that the distribution schematic may still be present. We first need to violate all of these levels. Even to 7,400, that may be the highest upthrust and then a decline. You guys know, analysis and execution, my friends, are two different disciplines. It requires a lot of mental game, okay, or discipline before executing or changing your bias constantly. In my opinion, as a trader, if there is indeed another retest at the lower trend line, why not trying to capitalize on the recent move? Which I'm forgetting here. that our most recent pattern, also presented in the room, was for a shark pattern also. This was our projection from these highs, okay, at 70,000 to a decline into 6,800. And a retest to where? To the previous high, to the lows at the 50% and the 0.618 that indeed created a decline. However, after also noticing this pattern, I said, all right, it's time to pay attention. Why? Because we breached above the upper trend line, now above the gap that was printed last January 16. Okay, so new information moving accordingly. It doesn't change my personal views on the macro, at least. So I hope this is clear. This is how I see the market based on harmonic ratios, the frequency of the market rhythm. Now, moving into Bitcoin briefly before culminating the stream. Also, you guys recall, our projections since July 2025 was another similar distribution schematic with the first test in the 123 to 124. Since then, I mentioned, I brought this attention many times throughout the streams. You guys can check from July. It's all there, as well as in our room. We presented that if this argument was indeed going to take us as an upthrust, how much low or how much low can the prices on Bitcoin go? We mentioned the 0.786 from these lows to the highs based on the weekly time frame to where? At 64,000, 6,500 with a lower level, a full reset basically at the 0.886, 57,000. Can we go there? As you guys know, we don't have all the answers, my friend. However, since this pattern is based on the weekly, please remember other technicians, other practitioners, other pseudo traders out there, what their goal was in July, August, October at these highs. Were they calling for higher levels, 200,000, 150? However, since this pattern is based on the weekly, we then also presented another pattern based on the 3-day chart with an immediate decline into the 80,000 region. This is a current information on Bitcoin that we're tracking very close, okay? We were favoring a downward pressure on BTC up until 80,000. Since then, we had many dates, pivot points within the Fibonacci analysis for the timing factor. The first one, December 15, okay? December 15, as well as December 30th, most recently January 14th, and most recently, a few days ago, we have the week for January 26th that we are still within the same week. So therefore, after reaching these levels, we mentioned in our room, we presented those arguments, long, shorts, along the wave within the trading range that after reaching these levels, we may potentially see an intermediate cycle low computing the previous highs and multiplying by the 1.618. For those unfamiliar, this is something that we do in our room to understand the pivot points based on the timing factors, okay? This is a technical proposition by Robert Fisher, also from another technician that applies Elliott wave theory within his reading. I only apply the timing factor for our technical proposition. Since we're now here, okay, after a long decline, technical proposition pretty much since August 2025, now is January, are we heading to those lows into the macro, to the major one? Keep in mind, this is a chart from July 2025, projecting a decline into the 65, 57 range. Can we go there? I do not know, my friends. I only present the arguments and move accordingly to trying to capitalize along the wave, okay? Unlike others who are pretending to know every single move. What I notice in the space, in the crypto space, is a new characters emerge, acting as if they know everything in the chart, but only until Mother Market present, teaching one of the most expensive lessons, which is humbleness. Those who are not humble in this market, pay attention, be humble. The market will eventually teach you an expensive lesson. Those who have been in the game long enough understand that we don't have control of the nature of the market rhythm. We move along, okay? We make projections, trying to compute those potential readings in order to, once again, capitalize on the market moves. Now that we are here, we're having the FOMC meeting. These are critical levels on the price action for Bitcoin to hold, okay? On the 3-day chart, we presented also that after reaching these levels, that was presented here, the first test at 80,000, we presented a short in the 92, 94 region. We waited until December 15, then executed a long on December 30th, projecting an upward move from the 87, I believe, to 98,000 region. After that test, I took profit personally from that long and wanted to wait for a short within the ABCD completion, another ABCD reciprocal. That brings me one chart in mind for the S&P 500 before finalizing. I'm going to touch that particular pattern back again into the ABCD pattern. Since then, another downward pressure after computing these levels, okay? Let me start with the order on my chart here. Technical proposition, December 30th, we executed a long. Then we reached those levels when January 14, another pivotal point. And since then, prices have been in a decline where I presented another technical proposition on the daily time frame, I believe, for a bending from the decline to these lows at the 0.786 and the 0.886. We first tested the 0.786. Okay, we reached those levels on Bitcoin. Where's my chart? Right here. If I go into the daily time frame, let's bring this chart now here. Okay, where we found indeed some support. Along the wave, I mentioned we took a long, took profit. Ideally, we wanted to execute a short at 98.8. We went to 97.9 on perpetuals and 98.2 on the CME chart after a major decline presented since. However, we are not breaking the lows yet, at least so far. If we do, you guys know that we have a larger formation since pretty much July, okay? Moving levels by levels is extremely important, my friends. So therefore, since we're moving levels by levels, once again, these levels are key, okay? We presented indeed a long. I entered an early long at 89.6, exited at 88.8 after this major decline, tried to enter a long early, remain another retest at 86, which I'm still in, at least so far, okay? At least so far. Why? Because we do have other arguments in the event to test another pattern, which is this one, the same one that we're observing now. If Bitcoin manages to break above the 0.618 from the previous high, 97, to the lows at 86,000 region, if we manage to break higher, we have a pending Gartley, another pending larger formation on the daily. However, pay attention to these levels. Why? Because this formation corresponds to a bullish shark pattern, which is an early or is precursor of a bearish 5-0, meaning that if a rejection occurs from the highs to the lows to where? At the 50% or the 0.618, ranging between 91,000 or 92 basically, as well as 93,300, then we may observe another decline as a continuation of the prevailing trend. You guys know the prevailing trend has been downwards on BTC pretty much since the October cycle top that we did in a stream, presented those arguments potentially for a top on October. What occurred? Major decline since then. Along the wave, you guys know we were trading long short. This is part of trading. We're not marrying to any position here, but rather acting accordingly, okay? So therefore, depending on what occurs today, I can observe still that if BTC breach higher than 91 or 94,000, we also have the pending Gartley pattern to where? To the 0.786, okay? I don't want this to be another pattern that falls shy of the PRC, the potential reversal zone, such as the previous ABCD. But we capitalized on the upward move, took profit, also part of the game, correct? Then re-enter a new position here. Previously, 89.6 was my previous long, exited, took a haircut here at these levels, re-enter now and fully back into profit. However, part of trading, my friend, this is not perfect. Anyone claiming that they have every single move figured out, congratulations, you're awesome. Anyways, so now this is the levels that we're tracking on Bitcoin, okay? These are the levels. You guys know we must bridge higher than 91,000 or 93,000. If we bridge higher, the argument increases for, once again, the pending bearish Gartley. However, this is also another pattern that we're tracking in the room that corresponds to a Wyckoff schematic, now potentially heading into the spring, around spring. Could this be the case? We will see, my friends. If not, of course, we will move accordingly. As of now, in a minor position here for Bitcoin, favoring a test of 91 or 94,000. If we go slower, we exit position, at least break even or partial profit. It doesn't mean we have to run those major home runs. But in the event of higher projections, giving also the reading on the 3-day chart, you guys can observe here that there was indeed a doji, a hammer presented yesterday or on the last Sunday, printed last Sunday on the price action for Bitcoin, similar to the previous one also from November. Still computing higher lows, maybe favoring an argument up until we will see if the 100,000 can be tested. And if not, we do know that our major projection, once again, from July all the way to 64,000 region and 57 remains there since July, my friends, okay? Moving levels by levels in order to remove any preconceived bias. Everyone, I hope this stream has been helpful and that you guys are moving accordingly without acting to know every single move in the price action. Why? Based on my own experience, I've been humbled many times, and every time I acted as I did know every single move, the market or mother market showed up teaching me an expensive lesson. Personal experience, I recommend everyone to respect the markets, be humble, and don't pretend to know every single move. Everyone, thank you for listening. I'll see you guys on the next one. Let's see what the FOMC meeting brings today. It will be an interesting outcome. Until then, I'll see you guys next time. Cheers. Remember to live a life with an attitude of gratitude. Bye, my friends.
Good morning, eyes open, I can see the light shining through. Good morning, blinds open, I'm coming home to you. Good morning, eyes open, I can see the light shining through. Good morning, blinds open, I'm coming home to you. Good morning, eyes open. Good morning, eyes open. Good morning, eyes open, I can see the light shining through. Good morning, blinds open, I'm coming home to you. Good morning, eyes open, I can see the light shining through. Good morning, blinds open, I'm coming home to you. Good morning, eyes open. Good morning, eyes open. Good morning, eyes open. Good evening, eyes closing, we can see the stars shining through. Good evening, blinds closing, it's just me and you. It's just me and you.